AAA says the average price for a gallon of gas nationwide jumped to another 4-year high overnight, and the Federal Reserve made a decision on interest rates as those surging energy prices create uncertainty for inflation and the job market. Karen Kafa is following the impact to our wallets tonight. And Karen, let's just say we're all feeling it.
Yeah, Leslie, and it may seem like a stretch to think that you filling up your gas tank this morning has anything to do with what the Federal Reserve decided here this afternoon, but it is all intertwined right now as the Fed tries to get a picture of the U.S. and the global economy. In their statement today, they cited uncertainty around the developments in the Middle East as well as elevated inflation as they kept interest rates steady for a third straight meeting.
No change in interest rates from the Federal Reserve on Wednesday as energy costs surge due to the war in Iran.
Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate.
Gas prices pushed to a fresh 4-year high on Wednesday, according to AAA. The nationwide average for a regular gallon of gas, $4.23, the highest since July 2022.
Crude oil prices have gone above $100 a barrel again. So we've seen a 20-cent increase in the national average in the past week, and we're paying more than $1 than we were this time last year.
Higher gas prices mean businesses and consumers face elevated costs for production, shipping, and transportation. Elizabeth Renter, senior economist for NerdWallet, says the Fed sees risks on both sides of their dual mandate of maximum employment and stable prices.
Inflation remains high and is likely climbing, right? It was high before the war in Iran started, but now it's rising because of the energy price shock or the oil price shock directly attributed to the war.
Keeping interest rates steady means consumers won't see relief on their borrowing costs, which may seem like another blow to households trying to keep up with debt and loans. Renter says consumers have been resilient and crucial to the U.S. economy.
I do feel like the consumer overall is hanging on tight, and as long as we see their spending continue to be strong, the economy should be able to withstand the risks.
And President Trump has been sharply critical of Federal Reserve Chairman Jerome Powell, especially in this second term, for not lowering interest rates quickly enough. Powell told reporters today that he will step aside as Fed chair when his term ends next month, but he'll stay on with the Fed as a governor. Leslie?
Yeah, you just said that. And this, so it means that he may have presided over his final Fed meeting as the chairman today. We know President Trump's nominee to take over, Kevin Warsh, is moving on to a full Senate confirmation vote after approval from the Senate Banking Committee. For Americans who are not paying attention to all of this, why should they care about who's actually leading the Fed?
Well, economists will say that it's important for the central bank, really in any country, to have independence from politics so they can make the kinds of long-term economic decisions that keep an economy healthy, right? They want a Fed that's going to be able to see beyond the next election. And there's been a real battle between President Trump and Jerome Powell, again, especially in this second term, about that independence, with President Trump really putting the pressure on Powell to lower interest rates, and Powell and the rest of the Fed, for the most part, not really seeing the economic outlook to do that. Powell was asked about Kevin Warsh today and his ability to maintain that independence. Powell said he remains confident that the Fed can remain free of political independence under Warsh when he ultimately takes over after that full Senate vote.
We'll see. All right, Karen, thank you.